The Reserve Bank increased the repo rate for the second consecutive month. Big economies like the US and Britain have also started making loans costlier. In such a scenario, people are raising questions whether they should invest in gold or not. Will the prices of gold decrease with a rise in interest rates, or will gold price also rise? Ever since the cycle of interest rate hike began in America, people have been asking questions about what will be the trend of price of gold. It is generally believed that with the rise in cost of debt, bond yields also increase. So this can reduce the demand for gold. Also, if debt becomes costlier, liquidity will decrease and the currency will get stronger. Stronger currency is helpful in reducing the price of any commodity. But both these opinions on gold have not always been proved to be correct. In the 70s, when interest rates increased in America, gold also became expensive. And in the 80s, when loans became cheaper, the price of gold also fell. Between 2004 and 2006, when the interest rate in the US increased from 1% to 5%, there was a 49% jump in gold prices during that period. Talking about currency, the dollar index is nearly at a 2-decade high. But in spite of all this, gold prices are increasing. Last week, the gold price was at a month's high. Despite the rising cost of debt in America and the rise in the value of the dollar, there has been a strong jump in the sales of gold. US Mint, the company that officially sells gold coins in America, said that during last month, 1.47 lakh ounces of gold coins were sold. This is 67% higher than that in April. In fact, May saw the highest sale in the last 12 years. These sales figures can encourage anybody to invest in gold. Perhaps this is the reason why experts are also predicting a rise in the price of gold in the long term. Sugandha Sachdev, Vice President, Religare Commodities, believes that due to rising global inflation and fears of economic slowdown, investment demand for gold may increase in the long term. Sugandha believes that by the end of 2022, gold can show a level of $2,070 in the international market and 56,000 rupees in the domestic market. Market experts are also of the opinion that when interest rates rises, investment in gold falls. But the anticipated rise in interest rates is already factored in the current price of gold. Money9 suggests you must consult your financial advisor before making any trade in gold.